The SEC has dropped an anvil on the entire crypto market, and a surprise Ethereum Layer 2 airdrop occurred yesterday that you're going to want to know about. This is your Altcoin Buzz news. Hey, what's up everyone? My name is Cody Buffington. Make sure to like, subscribe, and turn on notifications so you know when we drop our latest content. Follow us on Twitter at AltcoinBuzzIO, and as always, this is not financial advice, and we wish you the best of luck in your crypto ventures. Bitcoin's price taps a 3-week low as the SEC fears liquidate $250 million of crypto longs. Panic over regulatory enforcement sees Bitcoin and altcoins give up recent gains, costing long traders over $250 million in a single day. Bitcoin fell to bearish target zones on February 10th as bulls failed to hold important support above 22,000. United States SEC Commissioner Hester Peirce has publicly rebuked her own agency over the shutdown of crypto exchange Kraken's crypto staking program in the United States. The commissioner blasted her own agency in a February 9th statement entitled Kraken Down, arguing that regulation by enforcement is not an efficient or fair way of regulating an emerging industry. She wrote, "Today the SEC shut down Kraken's staking program and counted it as a win for investors. I disagree and therefore dissent." Peirce's statement also slammed the regulator for shutting down a program that has served people well. Using enforcement actions to tell people what the law is in an emerging industry is not an efficient or fair way of regulating. Moreover, staking services are not uniform, so one-off enforcement actions and cookie-cutter analysis does not cut it. Peirce implied the regulator was lazy and paternalistic and suggested the SEC should have initiated a public process to develop a workable registration process that provides valuable information to investors. Coinbase CEO and co-founder Brian Armstrong agreed with Peirce's comments in a February 9th tweet, suggesting that requiring businesses to register as staking services is a disingenuous offer as there is no clear path to registration. Coinbase is currently the subject of an SEC probe similar to that one that resulted in the Kraken settlement. On February 9th, the SEC announced that it had reached a $30 million settlement with Kraken, saying it failed to register the offer and a sale of their crypto asset staking as a service program. Kraken said in a February 9th blog post that it would still offer staking services to non-US customers through a subsidiary, but according to the SEC announcement, the firm is permanently banned from providing staking services to US residents, even if they sought to register it with a regulator. US Congressman Tom Emmer, who has been a long critic of Gary Gensler, reiterated the importance of staking in the crypto ecosystem. Emmer explained that the staking services will play an important role in building the next generation of the internet and argued that the purgatory strategy will hurt everyday Americans the most, as they may be soon forced to fetch such services offshore. The crypto markets reacted badly to the regulatory fears from the United States, but have already faced days of bearish sentiment, with traders expecting a retest of 21,000 or even lower. Those remaining in long positions thus felt intense pain overnight. According to data from CoinGlass, long liquidations for Bitcoin alone totaled 64.6 million for February 9th, and analytics platform CryptoQuant noted that these included 24.3 million in a single hourly candle, the most since the FTX crash in early November. Bitcoin saw 2-year lows just under 16,000 in the FTX aftermath, levels which at the time sparked mass calls for a trip to 12,000. Venture founder wrote in a Twitter thread, a retest of 19 to 20,000 Bitcoin, or the 200-day moving average zone, would be very appropriate here, adding that holding 19 to 20k during this correction would be the first confirmation that 16k was the Bitcoin cycle bottom. I recently asked you guys what crypto you'd recommend to your family just getting into crypto, and a good amount of you said Cardano, with the Human Blade and XLR8 profits saying this. Now, my question to you today is, after this recent market dump, which crypto should I add to my portfolio today? ADA, Atom, DOT, or Matic? Let me know why in the comments below. Ethereum staking service Rocketpool reached $1 billion in total value locked on February 9th. The move comes less than 2 years after the decentralized finance protocol launched its mainnet on November 9th, 2021. Dubbed a liquid staking solution for Ethereum similar to Lido Finance, Rocketpool allows users to join an Ethereum decentralized node operator or run their own node. This comes as no surprise after the news broke yesterday regarding the SEC forcing Kraken to shut down its staking services, with more US regulation likely to come. DeFi staking providers are beginning to see the influx of new business. Unlike conventional staking solutions, the capital requirements are far less, as users can run their own node with just 16 Ether as opposed to the network-specific 32 Ether. You can also join a pool where the deposit requirement is only 0.01 ETH. Depositors receive liquid staking token RETH in exchange for their ETH, which proves the user is entitled to staking rewards over time and accrues yield. In exchange for validating transactions on the Ethereum blockchain, Rocketpool node operators receive up to 7.26% per year, while stakers receive 4.68%. Currently, the protocol has just over 385,000 ETH staked and over 2,000 node operators. AAVE Companies, the firm behind AAVE, the lending and borrowing protocol, are launching its native stablecoin Go on the Ethereum Gorilla testnet. The stablecoin is fully decentralized and over-collateralized. Its design ensures the Go Oracle price is always fixed 1-to-1 with the US dollar, as minting will be through assets supplied as collateral in the AAVE protocol. AAVE is a decentralized lending and borrowing protocol that uses over-collateralization as a mechanism for ensuring the safety of deposited funds. In this system, borrowers must pledge more collateral than the amount they borrow, which acts as security for the lenders in case a borrower is unable to repay the loan. This creates a capital-efficient way to mint stablecoins while maintaining over-collateralization backed by a diverse set of cryptocurrencies supplied by those who deposit on AAVE. The founder and CEO of AAVE Companies said, "With the support and the management of the AAVE community, Go's decentralized stablecoin can power a payment layer that can easily secure and efficiently transfer value across DeFi and TradFi ecosystems." The Go codebase is now available on GitHub for developers to examine and test before its expected release on the Ethereum mainnet. However, the actual launch is dependent on the approval of the AAVE DAO, the governing body of both the AAVE protocol and Go. As the stablecoin will be managed by the AAVE DAO, anyone who holds AAVE, the platform's governance token, will have a voice in determining Go supply, interest rate, and risk parameters. Unlike other attempts at decentralized stablecoins, the interest repaid by borrowers will go to the AAVE DAO treasury rather than the asset suppliers, as the asset suppliers are already earning interest on their supplied collateral. The stablecoin has already been audited by OpenZeppelin, Sigma Prime, and ABDK. Prior to the latest market sell-off, Near Protocol pumped 6% after a Near community Twitter account said Near Protocol can serve as an infrastructure empowering next-generation AI use cases. It creates a value layer for setting rules and pricing of data, which can be utilized by different apps and protocols in an open, fair, and transparent way. To which the official Near Protocol retweeted to its 1.3 million followers, saying AI is near. DB on Twitter shared a screenshot of when they posted this and the price of Near shooting up after uttering the magic words AI. Near Foundation also recently announced full integration with Ledger Live, making it easier than ever for Near holders to secure their assets using Ledger's devices and software. Ledger Live is Ledger's all-in-one digital asset management app, enabling its users to manage and stake an ever-growing range of digital assets from the security and self-custody of their hardware wallets. Through its single, secure app, anyone from newcomers to crypto natives can follow the market, manage their DeFi portfolio, and explore Web3 with complete control and freedom. Our partners at Zone announced a partnership with Algorand in November to launch the biggest Web3 competition with a prize pool of $150,000. And as expected, the competition proved popular with the gaming community and had incredible figures to show for it. The Zone x Algorand partnership, starting from November 18th to February 5th, saw over 5 million games played and more than 106,000 Game Pass NFTs claimed, and over 1.5 million transactions on Algorand. The Playfi League was the first of its kind and leveraged Algorand's fast and secure blockchain to create a revolutionary gaming experience. Players were able to enjoy fast-paced, decentralized games and the chance to earn Algo tokens as rewards. The Playfi League demonstrates that Zone is enabling massive scalability and the potential for real-world monetary rewards in online gaming tournaments. 5 million games were played in the tournament within 72 days. This amounts to almost 28 years worth of gaming. The massive turnout shows that many will look forward to the next Zone X Algorand competition, as it proves a chance to earn huge rewards. The Playfi League was the first of many partnerships between Zone and Algorand. They have plans to improve the game experience and roll out more features and incentives in the months to come. Optimism Network conducted a surprise token airdrop yesterday, sending 11.7 million governance tokens to more than 300,000 wallets. The Optimism airdrop is part of the blockchain's initiative to distribute 19% of its initial governance token supply as the blockchain forges a path forward to wider adoption. Optimism distributed 5% of its initial governance token supply, or more than 200 million tokens, in its first airdrop last May. The airdrop comes as Optimism is looking for an edge over its largest competitor, Arbitrum, another Ethereum Layer 2 but without a token. Arbitrum currently has more than double the amount of transacting wallets as Optimism. Users who spent gas executing transactions on the blockchain qualified for the airdrop, as did those who delegated their voting powers, which is imparted by the governance tokens. The token fell 13% on the news that Optimism's circulating supply had grown. Even so, Optimism has rallied nearly 200% over the past few weeks. But at the same time, it most likely just sold off like every other token yesterday when the SEC news broke. That's it for your Altcoin Buzz news update. I'm your host, Cody Buffington. Thanks for watching.